Hey everyone, I'm Xander Sky. I'm a cyber bull and options. Uh, I wouldn't say guru, but I'm a student of YouTube, and I love the grind and the game, and people don't understand it, and they're super scared of it, and rightfully so. They should be, but I'm a self-taught individual who just follows the curiosity, and amazing things can happen if you just think that you can do something, and don't you know obviously don't follow anything I say, because I like to say I'm a monkey throwing darts. I don't know what I'm doing, and but me and Pejjy are getting to know each other, so it'll hopefully
Yeah,
be a good chat.
prior to me clicking record, we're just talking, and I'm just like, oh man, we should be recording all this. But those of you guys who don't know Xander, this is my first time meeting him too. He is well known on Herbert's channel. Um, he's the options guy, and I don't know anything about options. So he's gonna teach us or teach me or talk about options, how it works, the risk factor, the risk reward, I guess. Like I have no idea how options work. I'm scared to even try it. Um, so that's why I brought him on the channel. I think there's some good value here, and you guys can follow him on X as well. You can see on his tag right there at RX Alex.
Yeah,
So
R6, like the motorcycle.
R6, yeah, R6 Alex. So I'm a follower, and he does post some interesting things too. So welcome to the channel, my man.
Thank you, thank
And
you.
I know we had an awesome conversation going on, so let's continue that, and then we can start with the juicy stuff, the meat stuff. So
Sounds good.
yeah, so one second, I got the questions here. So you were asking me how I got into Tesla and
Yep.
how you know, and I'm pretty sure everyone knows the story now. It's like since 2020, and now um and when I started the YouTube channel, all that kind of stuff. So my question to you is how did you get into Tesla? Like what like I've seen you on the Herbert show, man, but like I don't know your story. So let's hear your story, man.
Sure, sure. Thanks for asking. Yeah, so sounds like we were very similar. In 2019, we saw the Model 3 ramp. Uh, I'm kind of similar to you in that I didn't want to invest in a company that has bankruptcy risk. So prior to finding Tesla, I was completely diversified. I had just like originally 40% total stock, 40% total international, and 20% to bonds. And then I realized that bonds are just there for your psychology. They don't make any money, but they don't drop in case the equities go. So which of course changed during COVID. But I went 50-50 international, and then I even have it on Facebook at the time in June of 19. I asked the question. I was like, what's going on? This company's value is dropping, because of some post or something. But I see all the cars. I see what they're doing, and it just didn't make sense. So I bought my first 5 shares that summer before they got profitable. It started with Galileo Russell. I wear the hat proudly. Um, Found him actually. We crossed paths by me responding to what my favorite YouTuber or
Yeah,
influencer is,
yeah.
and I didn't really have one. I had this whole like journey, and we can maybe post the link to that response. But long story short, it was a combination of like Dave Lee and Stephen Mark Ryan, and of course Hyperchange. He Gally broke down the numbers, and I'm a numbers guy. I have some frozen yogurt businesses, and
Mm,
it's all just math to me. I money has changed for me, in that it's not like I used to be super FOMO. I've learned my lessons. The idea of losing shares was just like a no go. Like if you
right.
sell a
Like
covered
me.
call, yeah, yeah, probably. It's
Yeah.
very very common. So Yeah, there's a lot of people out there, which again, I respect the being long term, and I am as well. My long term portfolio is pretty much do not touch. I'll sell covered calls on it in times of flatness, but overall, I started a new portfolio, which I actually, share the trades on my X account. Just for transparency and people to understand that there is a way to make money through options, both from selling cash secured puts, and we can go into details of what that means, and we can sell covered calls, and we can talk about those details. But overall, I found Tesla. I did the super deep dives, the Stephen Mark Ryan videos that made me laugh, and other content creators. I mean, there's thousands and thousands, and I mean, if I had to summarize it since 2019, I'm probably at like 4 to 5 thousand hours of watch time.
Wow.
Do the math, like per year, it's a lot. It became the thing that I did, and my family thought I was nuts, and I just kept watching, and then I found Clubhouse, and then X Spaces. Then I met all of these wonderful people that I surround myself with, and ultimately I pride myself on being the dumbest guy in the room. I don't know anything. I'm a monkey throwing darts, and that has served me really, really well to just not get too wrapped up in what I think I know.
Oh wow. So, um, we'll get to the options part in a bit, but like, are you all in on Tesla stock?
So the personal long-term portfolio is 100% is 100%
Okay.
Tesla. I'm betting on the 5 or 10 year move, and trying to time that as impossible. My kids are 100% Tesla. My
Wow.
my my wife as well. She's actually moving stuff around now to
Wow.
hopefully get the last of the 200, sub 200
Mm.
maybe if we can
Mm.
get it. But yeah, yeah, 100%. But then in the trading account, I've really opened up my dart throwing. So I started messing with Nvidia. I played a little AMD. I had my first options trade was AMC, and so I did. I caught it, like I predicted what the move might be from the GameStop crowd, which was to go after another highly shorted company. And the short story of it is I saw the CEO come out with like 900, I want to say $937 million funding runway. This is during COVID, so
Okay.
I I took my stimmy check and bought 1 week out options for that Friday. The stock price was at like $5, and I said it'll be at 10. And so by Wednesday, I woke up that $1,800 was worth 30 grand,
Wow.
and
But that's a
and
bet
that
though.
that's total gamble. It's a hundred
Yeah.
percent
That's what
like
I mean.
but the point is, right? The way I got interested in options was Emmett Peppers going on Dave Lee's channel and
Uh-huh.
explaining how he turned his retirement account from like multiple thousands to like 30 million, and it wasn't overnight. Well, knock my pen over. It wasn't overnight, but like it was this crazy journey of up and down, and I said, wow, there's this mechanism in the market that allows you to make these outsized gains or losses. But that's the thing. Like once you realize that the loss is controlled, but the gain can be exponential, right? Shorting a company is infinite risk
Yeah.
because it can keep going up, and you could lose more than what you put in. But with an options contract, it's limited in if you're willing to risk $1,000, the most you could lose is $1,000. And so that control mechanism was interesting to learn about. And so his journey, and I just asked the question of how, and that's how we got here. It was being curious.
Wow. Yeah, I'm a curious person myself, which is why I got you on here knowing about this option stuff because I do have well, I am public with my how many Tesla stock I have. I have close to 1,000 shares,
Yeah, yeah.
So
You've been
that
saying your goal is by the end of the year, right? I
yeah,
saw that post.
yeah, I'm only like 15 away from it, but I'm like, I mean, I could get it tomorrow, but I'm
Congratulations.
like, thanks, but
Yeah.
I'm like, no, I know I like to, save up for a down payment and all these things. So I'm like, I mean,
Yeah,
just
and
recently,
it's a number, right? It's just
yeah,
a number. Go ahead. Recently?
it's a number. Yeah, no, just recently, I never tried the full self driving on it before. So I
Yeah.
took my brother and my niece and nephew to the Tesla dealership in Toronto
Yeah.
where I had the Cybertruck because I haven't seen the Cybertruck either. And I
Hmm.
saw the Cybertruck and I'm like, this thing is massive. Holy jeez. And then I was just showing my brother all the models that they have, and the Model S wasn't there. And the guy's like, "Hey, I mean, can we?" I asked the guy, "Can we see the Model S as well?" He's like, "It's outside, but do you guys want to take it for a demo drive?" And we're just like,
Nice.
"Sure, we could take it for a demo drive." And my brother, well, I've driven all the Teslas except for the Cybertruck, and so he hasn't. So I'm like, "Okay, you take the drive, you take the wheel," and then we went for a ride. And then I realized, oh, wait a minute. Let me check autopilot. And I check autopilot that has full self-driving supervisor. I'm like, guys, we have to try this. And then we tried it and I recorded and I put it on YouTube. And I'm like, man, nobody can do this. Like no one can do this on mass scale. And I don't know. It's just hard. It's just like, how could you be bearish on a company like that? I'm like, maybe I should not save for that down payment, just buy what I can right now because once I mean 99% of people do not see this technology, have not witnessed this technology. Now, whether because it's not scaled, it's not been given out to all Teslas yet, or maybe because people are afraid of, and you got rules and regulations. But once people know about this and the fact you don't have to drive anymore, I mean, just the stock right now
Agreed.
is ridiculously cheap. You know what I mean? When you look at it, it's just like no one knows about this thing. Nobody
Yeah.
absolutely. And my brother was saying, he's like, this is like magic. This is like alien technology. And I'm like, and that was his first time ever like trying. It was all our first times trying it. So that was a really good experience. And when I experience something like that, I'm like, why wait? Just buy as much as you can. In 5, 10 years, I don't based on how I see things, it doesn't even matter if you bought a 100, 200, 300, even 400. If when this technology, it's not a matter of if now, it's a matter of when this technology gets rolled out everywhere.
Yep. I'll tell you what I did. I actually bought a house this year. I completely agree with you, by the way. And it, anyway, so I just view money a little differently, and then like I always want to have it deployed. My personal checking
Mm,
account has like a few grand. Um, I'm when I needed the down payment, I just did specific identification, and this was around the 250s or something like that. And I
mm,
actually sold shares that I bought, higher up in the 300s or whatever, and then just tax loss harvest. So I don't look at it like, oh, I'm gonna have to sell shares, or I park my money and it hopefully grows over time, and then if I ever need access to it, I sell some shares. And like maybe that's taboo, but I don't
mm.
care. I
Yeah.
just don't care anymore what like being this label of I'm all in Tesla should
Mm.
only be if you want to be all in Tesla. If you want to sell some shares because you want to buy a house, you need a place to live. So that is how
Yeah.
I did it. For me, it was just keep everything deployed at all times. Or maybe sit on it and then do like cash secured puts and then try to deploy it into the stock. But yeah, I
Yeah.
completely agree with you with the house, and then
Yeah.
the FSD is just it's like I want to keep it a secret. I don't want the market to get it yet. But then to be fair to the market, until they deliver, right? Until they actually uh,
Yes.
deliver a product that you can monetize, and so I'm super bullish on Tesla and everything that they're doing. But at the same time, I'm done waiting for, the
Mm,
next round of FOMO. I'm just going to play around, and then when I see that next wave come, as we saw with the 180 to 270 wave,
yep.
that was a great sign, right? The technicals on that are worth talking
Yeah.
about.
Yeah. Yeah. I don't like for me, when it comes to technicals, I'm like, I don't know, man. It's hard to tell because it's like if it goes like this, it goes like that. If it goes like this, it goes, and I'm just like, man, forget it. Just look at the fundamentals
Yes.
and see the macro environment. And the macro environment is slowly changing. In like here in Canada, we had two interest rate cuts because man,
Mhm.
I don't know how which state are you living in?
I'm in Texas.
Oh, Texas, that's an awesome
I
state.
come from
Yeah.
California. I lived there for over 20 years, but
And then you just
then
screw it, go to Texas.
that's it. That's it. They messed with Elon, and entrepreneurism is
Oh my
demonized
god.
apparently. So I'm out of there.
Yeah, no, see, Texas, it's a well in Toronto because I'm here in Toronto, Canada. It's expensive here, man. Like for
Hmm.
example, a one-bedroom apartment. I put a down payment recently on a one bedroom apartment here for pre-construction. Not even
Gotcha.
just an actual thing because it's easier to get a pre-construction than a mortgage. So
Okay.
one bedroom, 480 square foot, $600,000 Canadian. Could you believe
Wow.
that? That's
Wow.
like I think 450,000 US dollars, and I'm just like,
Uh,
with that money, I can get a whole acre in Texas with a house and everything. It's crazy, and that's why
yep.
I do feel regret putting that down payment on for that, and it's pretty much locked until 2031, if there's
And
no
what's the
delays.
interest rate?
No interest rate
Okay.
because it's
Gotcha.
pre-construction, it hasn't been built yet. So it's like you put in 20% down, and
Uh-huh.
then you would wait until it gets built. Then when it's ready to be occupied for occupancy, then you could either mortgage it, sell it, or live in it, or rent it, whatever it is.
So you essentially bought an option to build
Is that
to,
what an option is? I don't know.
that is
Seriously?
that's what
Oh
it
my
is.
god.
Yeah.
But it's
Yeah,
more
it's
I mean,
the
I don't I mean,
option to do
okay, yeah, go on,
something.
yeah.
Yeah, you're exchanging money, right? You're exchanging your money because, like, okay, why not invest that money in a treasury bill or whatever your
Right.
Canada equivalent is? What kind of return are you getting on locking up that capital?
Well, the main thing is because here in Toronto, in Canada, the only thing that's really good to invest in Canada is real estate. And
Hmm.
that's it. Everything else sucks.
Gotcha,
Uh,
gotcha.
um, so it's just the capital gains really. And renting, being a landlord here in Ontario sucks. It sucks because it's not landlord friendly. If the tenant
Gotcha.
doesn't decide to pay you rent, well then you got to contact the tenant board. You can't evict them. You have to wait for them to get
Wow.
back to you, which takes a year. So imagine not collecting rent for a year, and you know? So it's like it's a headache here as well. So I'm thinking maybe it's better just to sell the thing once it's ready. It's just easy capital gains. But I don't know.
Gotcha.
That's why I feel
Maybe.
I regret it doing this. But I don't know. Let's see. It's not
Interesting.
the first
Well,
time I'm doing this, but let's see.
oh, you've done it before.
I've done it
Um,
before, yeah, and
and
it's doing well. So the one that I got the other time is doing okay, but
gotcha.
um again, it's scary. And I know in Texas and Florida and some of these states, they're landlord friendly. So if you don't paying your rent, hey man, I can go to to court. I can get you out within a month or 2 months max. Here, Toronto, it's not the case. Not the case at all,
Gotcha.
and that's
See,
scary. And it's gotten worse recently. So
that's why I like equities,
yep,
it's simple. You can see the product, you can test the product, you can
yep,
drive the product. You're hands on with it, and someone else does all the managing or tenant
yep,
picking, quote unquote.
yep.
So, yeah, for
I prefer equities too. Yeah.
yeah,
The well, yeah, go into the options thing before. So I have close to 1,000 shares. That comes down to what, 10 contracts? I think each contract is 100 shares.
you got it. Yeah. Yep.
So
So what you
I
could
mean,
do is sell
yeah,
covered calls against it, but the big risk, especially now, is that Tesla has this explosion away from the 200s, right? And you can see that, the old saying, the bigger the base, the bigger the breakout, or the
right.
longer the base, the bigger the
Yep.
breakout. So It's a dangerous game to play. It can be played. I was I sent you some screenshots. If we'll get into that later if you want. But
Yeah.
I messed around, in the 150s, and then I had to kind of roll out. And there's a strategy for it. But again, people don't want their shares called away, so a
Yeah.
lot will start doing this during down periods. And so that's the beauty of like having a skill on if the market is moving down, you can bet, you could bet that it will continue going down, and you could leverage this position that you have in Tesla to generate cash flow, right? To generate covered calls. Because if you're, the entire environment is anti-equity, like we still are technically, with raising interest rates, the DCF models that are calculated are, lower. So the value, of the company out to 2030, let's say, and then you discount back based on the interest rate. That means that you're taking bigger steps to get back to present day value. So that like learning that lesson after the interest rates, right, when the Fed pivoted, um, like I had no clue what that meant. There was only one YouTuber, and I can't even say his name, apparently. And he pointed out that he sold all of his holdings, and then went to cash, or went to shorting, or
I
whatever.
know what you're talking about. Yeah.
So and that person at the same time during COVID refinanced all their properties, and put it all into stonks and rode the wave all the way up. So like this knowledge that's possible. So like my weakness during the last prior 2 years, prior to like this last 2 years, was just economics and understanding how interest rates and gold and all of these things play together, and rotation. So there's actually a YouTube channel I recommend. It's FX Evolution. And this channel kind
Okay.
of breaks down how money moves, and it goes through different markets, not just the U.S. And so it's very comprehensive, worth the time. They make daily videos. That was the game changer, And to this day, I still watch his videos, and he's like an Aussie or something like that. So
Hmm.
recommend him. But yeah, understanding how everything plays together is been important, because like you, I was looking at Tesla going like, there's no way it's gonna go below 200. It was at 400. Look, 50% correction in this
Yeah.
in this mega growth company. No way. But then, hey, reality sets in that when
Went all
interest
down
rates
to
are too
100.
high,
Yeah.
and then we go to 100. So again, it's the same as the way in. I asked the question of, okay, how does it happen? Why does it happen? And try to learn from it, and detach some of that FOMO that I had,
Yeah.
that led to holding on to leaps when, you said technical analysis. The point I wanted to make was, if we look at the chart, and there's one behind me, but that's the current one. But if we change it to like to zooming out, and you look at that yellow line, and that's a multi here, not daily. Let's do a monthly chart, so it'll be much easier and faster to see. You see that little wedge that we have there.
Can
So
you? Yeah, that little. Yeah. Okay.
I
Can
mean,
you bring it on the screen?
probably. Let's see, present. I
If
think so.
not,
Let's try it. Let's
okay, let's
try it.
try it. Yeah.
Let's see, share screen. Well, this is gonna be weird. Let's see what
No
happens.
worries.
Hopefully. All right. What is it doing? Select a tab to share. Uh-huh. Oh, it says window. Here we go. I could do window. There we go. Share.
Ah, there it is. Oh, it went
You
away.
see it? Did it
It
go
came
away?
for a second, then it went away.
All right, let's try that again. Share screen. Never done this before. Herbert never lets me play with the controls.
Wow. Come on,
I
Herbert.
know.
Oh, it
I
came in and
know.
went again. Huh.
All right.
Interesting.
Anyway, the point is
Yeah.
there's a
Yeah.
triangle back there.
Yeah.
And the important part, actually, you know what? I bet you I can do it in a different way. Display capture. Is it on the screen?
Oh, yeah. Oh, okay. I see. Let me go zoom out a little bit. There we go. Yeah, yeah, I can
Yeah.
see it. Ah, all
Okay.
right, all right. I see it now.
So,
We see.
so okay. So this is the weekly chart of, or is it the monthly? It's the monthly chart. And so you could see how you have this descending triangle. Now, I had leaps and I had multiple chances here, 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 even here to get out at a profit, and then here. So I had like four different chances to get out uh, with a profit. But what did I do? I didn't. And that's an important,
Yeah.
expensive lesson that cost me, hundreds of thousands. I've lost about 200 grand. And now, mind you, I don't come from money. Everything I did was from businesses, and we own some real estate in California, and we sold it. And I was trying to deploy. We sold in 2021, end of 21. As you could imagine, if
Good
you go
time.
look at the chart, it was a good time and the worst time. So for a second there, all those leaps were making me a lot of money. I was on top of the world. I thought I was going to path to retirement, and then I wasn't. So
Hmm.
those lessons of being super bullish when the market is telling you something, I kind of learned to listen. Now it's really important to be on the other side for me, is not to be scared of buying leaps again, because I was correct ultimately. I just should have let go when the move started to go against you. And so, like that trading and this options game, I think about it like golf. You have a good long game, right? You can drive the ball really far, but
Yep.
can you putt, right?
Hmm.
Do you have a good short game? And so developing that skill has been my goal, and then being able to identify when this like move happens. What Emmett Peppers did was he used his knowledge for options to play the S&P 500 inclusion, and
Hmm.
he staked a lot of money on a relatively short-term gamble, which was, I think, like January contracts, and he bought them, I think, in September or October or something like that. So,
Hmm.
and then he made a killing on it. So,
Wow, that's not a bad idea actually. Doing covered calls on S&P 500 because it always goes up. If in the long term, it always goes up.
but that's covered calls, right? So
Yeah.
covered calls is different than just calls. There's a theory in options.
Hmm.
10, like some say 8 out of 10, some say 9 out of 10 options expire worthless. And
Okay.
I believe that to be true, except for the last 100 days or so. Um, on my X, if you go into highlights, you can see just literally a screen capture of my trades. And when I took that, it was like 128 trades, and 118 of them were profitable. And that
Okay.
is buying and selling options, both cash secured puts, covered calls on the shares that I did end up buying. There's a thing called the wheel strategy. I highly recommend. My favorite uh, favorite YouTuber for options learning is In the Money. He
In the
is
money.
in the money. He's my favorite. I always recommend it. There's an article on my page, and I highlight all of the things actually that I'm talking about. Is right there with screenshots and everything. And
Hmm.
it's if you're curious about options, I recommend you go read that, because you really need emotional uh, EQ. You really need to
Yeah.
you need intelligence when it comes to this ability to like stomach losses, or if you just, because you're always going to do the wrong thing. The market goes up, you sell. You're supposed to sell, or in an options game, if you're selling contracts, you're supposed to do the opposite. So you sell covered calls at the top of the day, and then you close them at the bottom of the day, and so there's a lot to it. If you practice it, you can master it. If I did it, and that's my entire message to everyone is, I don't try to do this for for clicks, or I really want to help people realize that if this idiot can do it, like everyone can teach themselves
Yeah.
financial literacy. I'm a college dropout, and I figured out a way. And if I could have that kind of success rate, am I special, or is it just that I've kind of put it all together and put the technical analysis together with the life lessons, together with studying the business, as opposed to just the stock, and understanding where and at which point does Wall Street want to make money off of this equity. So uh, anyway, I
Wow.
feel like I'm
That's
teaching,
interesting.
but I
Yeah.
guess because that's what you want me for, right?
Yeah. No, exactly. Yeah. Yeah. With the great success that you've had. So before we move on, what is the difference between a covered call and a call? Because I thought they're the same thing.
No. So a covered call means you're selling a options contract that you are willing to sell your shares
Oh.
for at a predetermined time, right? That's the date, right? And then for a predetermined strike, which is the whatever Tesla gets to. And so let's say for next week, you think like there's no way we're gonna hit 250, right?
Okay.
You go like there's no way. There's not enough news. There's nothing secret that you might have heard whispers about. There's just nothing. And you go like, yeah, I'm willing to sell a contract. And for that contract, you can open up the options chain and you can see what someone is willing to pay for that option contract. And what that allows them to do, the buyer of the option, it allows them to buy the shares at a predetermined price. Let's say that they think it's going to go to 300, but they want the option to buy it at 250, and it's 100 shares worth, as you mentioned before.
Okay.
So that's what an option contract actually is. Like if you have a lease contract, I have a business, so I have a lease, and after 10 years, I have the option to extend it for 5 years. So they threw that in for free, but they could have charged me a premium for it, right? If I wanted that option, they charged me a little bit more rent across time, right? That is what an option contract actually is. So the buyer of the covered call is buying calls. The seller of the calls is using covered calls. They own the strategy. They own the underlying, which is the Tesla shares in this case. Does
Right.
that make sense?
Yeah. So, okay, well, I guess we'll get into that. We'll get into that because I'm looking at my options
Mm-hmm.
call Wealth Simple here,
Okay.
and I'm just like looking through these things, which is pretty interesting. We'll get to that. We'll get to that later on in the bit. Some questions that I do want to ask you is, I mean, what are you looking forward to for Tesla the most? Like when you look at it today, and then
Mm-hmm.
you look at it in the next 5, 10 years, what is it that gets you like? Yeah, because of this, I'm bullish at it. I have to stay in the game.
Yeah. Well, that's great question. That's why long-term portfolios do not touch. And if you sell covered calls, you got to be very careful because I don't want to miss that move because it's going to be violent in my opinion.
Yeah.
And I think what happens is once Wall Street realizes that the earnings per share is going to start moving up, right? And
Yeah.
Wall Street wants to see it actually in financials. They're not worried about missing the beginning of the move. But uh, what I'm excited about is just this new future, right? The paradigm shift in how humans circumvent the globe by like I think about it like smart car versus dumb car, right? Smartphone versus dumb phone.
Oh yeah.
We just gave my son a flip phone because he's almost 12, but for pickup we want to be able to call him, but we don't want him to have the
Oh yeah.
everything in the palm of his hand
Yeah.
at his age. It's too soon.
Yeah.
So
That's true.
but I think what happens is like with FSD, that's what I originally was invested in was full self driving and I'm actually a computer programmer by
Mm,
education. Even though I dropped out, I've been like since ninth grade. I had majors in my high school, and I was a computer science major. So took a bunch of
nice.
languages. I kind of understand, how things work by understanding the code that's running it, and understanding that like FSD is now being written by the machine itself. Went from 300,000 lines of code to 3,000 lines of code. That is just insane that it can watch videos and pull out how the human is driving, right? And
Mm,
create its own rules and deduce how is the human able to make the decisions that they're making. So if we simplify it like that, and then you project forward and you go like, okay, so what happens when they take that code and they apply it to other things like robots, and they apply that ability to learn from humans and then perform tasks on the human's behalf? That to me changes literally the entire world.
hmm,
And those kinds of shifts you don't see those very often. You saw it with that iPhone moment where all the humans adopted this technology, and there's others, right? There's many, from TVs to how music changed, and so on and so forth. Like we can look at adoption curves. So something that was huge for me in 2019 was ARK Invest for their research, right? Not for their funds. I never invested in their funds, or maybe I did
mm.
for like half a second and then sold it after I realized that there's just no point in following. So but Moore's law, Wright's law, understanding adoption curves. So what's his name? Um, there's a guy who's Tony Seba. So
Oh yeah,
his
Don Siba.
his yeah. So his
Yeah.
research, like that's the kind of thinking that really helps looking forward and being a 10x investor or a 100x investor like Dave Lee. You don't have to, like Warren Buffett says, you don't have to make a lot of moves to be successful in your
Mm,
life. Like, what do you need? 3 wins,
that's
and
it.
don't swing at the pitches that like options is just it's most of the time it's degenerate gambling, and you got to recognize that. And so for the majority of people, stay away from it. But there is a way to do it successfully, and I'm an example of that. So balancing all of those lessons is important, and managing greed. I will say this multiple times today. Managing greed is by far the most important lesson that I got out of my financial journey over the last 5 years. And it's just because it's so easy to go and get caught up in that next FOMO wave, and not realize that there's a gravity to equities. Yes, you will have a 20x move, right? So you want to be a part, but then FOMOing in at the top of it is probably not the best idea, or going all in at that point. You're supposed to catch, on red days, you're supposed to get excited, not on,
Yeah.
10% green days, you get excited. So I've kind of rewired my brain by teaching myself options. And now that's how I swing trade the portfolio. On a red day, I'll buy some kind of leap contract out maybe a year or two, and then it goes green in 2 days. Oh well, okay, I'm going to take my win, even though
Wow.
it's a 1 year out or 2 year out contract. I just, in the trading portfolio, the job is to make money. So I stopped with this, like, okay, it'll keep going, it'll keep going, it'll keep going. But with that said, you may leave some profits on the table, but man, that's a great feeling. I love leaving profits on the table now, because it means I called the direction correctly, and I made a timely investment. And then that translate it helps with options on, like, selling covered calls. It helps with buying or timing when you buy shares. So there, and then there's another one, but I'll let you ask a question, or give some feedback.
Yeah, no, no, no. Keep going. It's interesting. It's interesting with all the points that you're saying. But you did say that the thing you're looking forward to is the how the language modeling or how the Tesla will deploy their full self driving. Um, but what do you think about the bot? Like, what do you think about? Because I mean, for me, that's a massive cherry on top of this Sunday,
Yeah,
whatever. But
exactly.
I'm in it because of the full self driving. The bot is just the way how Elon talks about it.
It's
It's a
too
whole
big.
different world. It's too big for me to even comprehend, you know. And I'm
But
trying to add it.
it's
Yeah,
connected. Go ahead.
yeah. No, I'm trying to put it in my valuation. I'm just like, I mean, like I asked a question on X the other day. I'm like, so wait, how much? How many bots do you think they're going to make? And starting from what year or something like that? And people are talking about, yeah, in 2026 or 2027,
Hmm.
it'll be like 10,000 bots. I'm like, doing what? Like, selling where? I mean, okay, sure. Elon said next year there's gonna be 1,000 bots in the factories, sure, but 10,000 bots being sold out, like each side for 20,000 each. I don't know. It's weird. Yes, that they're easier to build than cars. I get that, but I don't know. I don't know. It seems too early. I don't know. It's just hard to comprehend this for me. So,
So you just mentioned that I think before we started recording that you just tested FSD, right?
oh
Maybe
yeah,
it was after you recorded. So
yeah.
ask yourself this question. This is what helped me, wrap my brain around it. Unlike you, I don't actually sit there and model the company. I don't need that. I watched other people model. I'll
Mm,
ask questions about what their models are. And I go, do I agree with their kind of underlying thesis? And does it make sense? And that's what I do with everything. I just go like, this what this person's saying makes sense. And I most of the time call BS on lots of things, right? Everything but then it's led me to this company, and I just look at it like, you just tested FSD. You can see that it is driving like a human. Is it perfect yet? No, it isn't perfect yet. The March of the Nines is a huge undertaking to be able to get enough data to analyze and to build a solution. So I'll give Tesla as much time as they need, because what they're doing has never been done in human history. So like, when I think about that statement, it's never been done in human history. You want it tomorrow. You want it to be like, because there's financial interests involved. So people are like, they're making short-term bets. You can see there's this influencer flips. That guy made a bad bet. I stay away from all of that noise, and I just think about where does it go after FSD. It's just like the options bet, GameStop. Where are the guys going to go next? So when you ask yourself that question, and I ask you, where does FSD go after the cars? After the cars, where do they apply
to the bots. Yeah, I
it?
know. Yeah, I know. That's right. That's right.
That's it. It's okay. Now imagine we can get down into the imagine situation. Okay, your wife makes this recipe extremely well, and and she can now teach a robot how to do that, and then sell this course or sell this app or widget or whatever, sell this thing into the bot in your home, and you can have that prepared by this amazing recipe that the wife developed, or whatever. You could go on, chef, I said wife, but let's say chef, a Michelin grade chef with a restaurant, teaches the bots and sells it. We could go on and on and on, creating these like ideas of an expert teaching a machine, and then it proliferates throughout society. How much would you pay for that? Do you want to free up your time to go do other things, or do you want to be a slave to money your entire life and exchange your time for money? I don't know. That's up to you. But that's how I think about it. And
Yeah,
I'm
no,
and
it's interesting. It's going to be an interesting world we're going to enter in the next 5 years with autonomous driving. Some are saying the boss will come before the autonomous driving thing
Sure.
because there's a lot of rules and regulation.
Yeah. How do you
But
think about it?
I don't know. Like that's the thing. If you're gonna have a bot deployed, doesn't that also need to have rules and regulations? That you're gonna have some, you know what
Sure.
I mean?
Safety,
But
yeah.
but I mean, I think it's safer to have a bot than have a car drive itself. So I also think in that world as well. So I don't know. It's weird. It's a lot of things to look forward to. It's a lot of work, that's for sure. It's not gonna be an overnight thing. The stock will be an overnight thing, in my opinion, once they realize it. But
Eh,
the
oh,
the work, I think
w-
in China, I don't know what's the update with the full self driving with Baidu because I know they're working on something there since April. Um, then they haven't entered Europe yet, but I know they will. Just a lot of red tape there. And then in the US, we see deployments of full self driving. Even in Canada, we see it happening. People like when I rented it on Tesla for 31 days, the Model 3, and it didn't have full self driving, but it had um the auto steer, the autopilot.
mhm.
And every time when I'm on the highway, I would always use it. And everyone would when they're driving by, they'll just look into the car, they'll see my hand's not on the wheel. They're like, what the hell is he doing? And I'm just like, hey man, it's just, it's going. It's autopilot.
Yeah, yeah,
So
yeah.
yeah.
I rented a Toyota in I was just in Cali for actually ended up being 6 weeks,
Mm.
and I rented for 3 weeks, so it was really expensive to get a Tesla, and I actually took it to the Tesla takeover, which was hysterical. Galley put the cyber bulls on blast with me getting into it, which was fun, right? It was fun, but the thing is I actually got to see that even Toyota, it's not a good lane keep system because it bounces around in the
Yep.
lanes, but they have that too, and it's able to keep. It's a very basic system, and it doesn't do a great job with turns. Sometimes it likes to ping pong off of it, but it works well enough. And I just think like this idea that you have to take the entire market, or you have to be first. I think you have to have a great product that people want to buy. And if they feel safe, right? Originally, I didn't feel safe, giving the car control with autopilot. So
Mm.
my hands were literally hovering over the wheel. Now I still, to this day, my hand is in my lap, and FSD is doing everything, and my fingertips are on the wheel, just in case, right? Especially passing a median or a divider or somewhere where if it does something erratic, it's my life on the line. So,
Yeah.
and it's my vehicle on the line. So, that trust is built over time. It's not going to be super fast. I don't
Yeah.
think that one day regulators just go ahead, you can have the whole country, you could do whatever you want.
Yeah.
I
No, I
don't
don't
think
think
that's
so
how it
either.
works. But at the same time, if it's safer than a human and lives are saved, that's ultimately what regulators want. And
Yeah.
that's why they've had a pass. That's why Waymo can do what it's doing in certain states. Even if it means that Tesla will have to have teleoperators. I just think that there's like a path to full autonomy, but it's not going to be overnight. So that's why I don't have like this fear that the stock is just gonna rip out to 1,000 and I'm gonna be stuck. I think we'll see that, right? We'll see the market start giving it credit, and the headlines change, and the upgrades happen, and so that there's smoke and fire. When I see that, that's when I kind of shut down all the covered calls and the betting that it won't go up. But the reality is we've been doing this for many, many years of it bouncing around between, two levels essentially.
Yeah. Yeah. No, that's true. Yeah. And yeah, with FSD, it'll be like a state by state thing. Not sure.
Hey,
Um,
why do you think they're gonna allegedly, rumor mill, why are they doing it on the Warner Brothers lot
I don't
for the
know.
1010 event?
I haven't really looked. I mean, I'm not thinking too much about it, but some of the comments that read, they're saying it's because it has a track and they want to show the thing drive itself, maybe
Hmm.
show the demo
Right,
how it
right,
is. That's what they're
right.
saying.
And
But
it's like a neighborhood. It looks
yeah,
like a neighborhood, so you can get a real visual for
of how
in a
it's gonna
safe
work.
manner, right? In a safe
Yeah.
manner. That's
No, I'm
controlled
excited for.
environment.
Yeah, I'm very excited. I'm very excited. Why do you think? Is that
That's it. Yeah,
that's it?
I think
Yeah,
it's a
that's it. Yeah.
controlled environment that looks like your neighborhood, and people can get a feel of what it might be like. And with intersections, and maybe they'll do actors or people that are, paid, and signed waivers or
Yeah.
whatever's involved. So they're willing participants. So
Yeah.
that's how I think about it.
Yeah.
It does make sense.
It does. Yeah, it's very interesting. I'm very excited to see what's going to happen on October 10th. What I'm expecting is them going like, okay, here's the vehicle. There's no pedals, there's no wheels. It's just
Hmm.
two-seater for now. I don't know if there's going to be another vehicle unveil. I don't know. There has been rumors of that, but not going to have expectations of that. But they're going to say this is the vehicle, this is how it looks like, and yeah, we're going to start this in this city at this date.
Hmm.
Sometime next year. I mean, I am expecting. I'd be surprised. I would be shocked if they don't say a date of when they're going to start. That'll be a little bit of a downer for me. But it can't just be a Robotaxi event where okay, you unveil the Robotaxi and that's it. All right, guys, here it is. How this is how it works. Go home now. It's like, well, no, when you're going to start, where you're going to start, you know, how's it going to work? Show us the app. You know what I mean?
Right.
But I'm really looking forward to this date of when they're going to actually start, whether it's going to be in Phoenix or San Francisco, where they already have, with Waymo is already doing the thing. So, but I think once that starts and it keeps collecting data, because they're going to have so much data, they're going to move so much faster than Waymo and the other guy. I don't know what the other guy is in the US driverless car so much faster that it's going to be okay. 6 months later, we're starting in Idaho. Another 3 months later, we're starting in Texas. Another 3 months, like it's gonna pop out everywhere and very quickly too.
Hmm.
But n- artificially geofenced. Okay, for now you can do it here, but then the more data comes, then you can expand it to other areas. I th I
Gotcha.
believe that's how it is with because with Waymo, they just can't go over this geofence because it's LiDAR and all that kind of stuff, which is not
Right, right.
scalable.
Yeah, that's what's
But with
mapped. Yeah.
yeah, with Tesla, it's like, no, I mean, as long as I can see the road, I can see everything, I can think. I know how to do it. So that's what I'm expecting overall after this Robotaxi event. So yeah, it's gonna be interesting. Yeah.
Yeah, I was thinking it would be in the boring tunnels first, because it's such a
Okay.
controlled environment where there's no intersections. It's just you're avoiding people, and then you're the ability to pull over, pick up passengers, drop passengers off. Right, you can train that way before you do a city. Uh, is how
Yeah.
I thought it would go. I guess I kind of like your idea regarding an artificial zone. Um, that does make sense. That they would geofence it in that regard. So, um,
Yeah.
but
I mean, they got
I
to
don't know.
start somehow.
Tesla
Yeah.
likes to break eggs, right?
Yep.
They like to make that omelet and break the rules, and so I don't know. Maybe they do it differently.
Yeah, let's see. I'm excited to see what they're gonna do that day, and I'll be very disappointed if they don't have a release date or when they're gonna
Yeah.
start.
Well, so you think that it's going to be one vehicle, or
Well, for
like
sure, one vehicle, for sure, one vehicle, which is the main
not not
Robotaxi.
not one vehicle, one with pedals, one without, for sale to
It's
consumers, or
it's.
what
I
do
don't
you?
think they're gonna show. If they're gonna show the one with pedals and wheels, that means it can be ready to be bought, and I don't think they want to have any cannibalism for their or Osborne effect or whatever it is for
Right,
their
right, right,
vehicles. Because right now they're, you see what's going on with this, with this new Model Y coming out, where everyone's like, "Oh, there's a new Model Y coming. Why buy the new Model Y now? Just wait until that comes out." That hurts
yeah,
sales. And Elon has said it so many times that, "Hey, stop this! Don't stop spreading these misinformation." And I've been a victim
right,
of. I know I've I've done that a couple times. So I slowed that on big time.
yeah, yeah.
But um I don't think. I mean, if they're going to release a new vehicle or show us a new vehicle that you could buy, they would do it in a way that you can order it right away or within the next 3, 4 months. They won't like, okay, this is coming in 2 years and the price is like 25,000. Oh, 25,000 Tesla? Okay, forget it. I'll just like taxi it for now or Uber it for now until that car comes out. You know what I mean?
But
S-
yes, but at the same time, I'll tell you two anecdotes. One, I have a Cybertruck,
Nice.
and I'm actually about to sell it and upgrade to the Beast. Um,
Nice.
so, but like a friend of the family daughter is graduated going off to college or whatever, and they need a car and they want the safest car, and they bought a Model Y last month. They didn't wait. Actually, September 1st is the just yeah is
Mm.
the expiration for the free supercharging.
Oh,
He was
nice.
just messaging me about
Today.
that. And the reality is when you have a need, if you keep waiting for the next model, you'll just keep waiting because it's always getting better.
Yeah.
They're always refining it and making features, even if it looks the same on the outside. Um, so you'll always be waiting. Oh, hardware 3, hardware 4. Oh, then it's going to be hardware 5. Then it's so like this mentality to me, I just think about if you have a need, you're going to get it. If you can wait, you're always going to wait, and then
Yeah.
how many generations are you going to wait for? So I just
Yeah.
uh,
No, that's true. That's true. Like for example, what I see happening is that okay, so if the Model Y, I don't know how much it is in the US. I think it's 35 grand, if I'm not mistaken, in the US, somewhere
yeah,
around
something like
there.
that. 40, yeah.
Yeah. So I mean, if another model's coming out that's gonna be 25 grand, it's gonna be like, okay, wait, I mean, if I already have a vehicle and I don't need to sell it to buy a new one, I'll just wait until that one comes out because it's cheaper. So I think this is what Elon is trying to avoid. Because right now, car sales are garbage. I mean, I'll just be honest. Because
Yeah,
interest rates
with
are
with
up,
interest
and
rates, yeah.
but they are going to go down next this month. Actually, yeah, we are in September
Yep.
this month. So I think um, just how Tesla brought down the prices so hard when interest rates went down, the opposite I think will happen as well when interest rates do go down. They would have to increase the prices to, level off demand. Um,
Exactly.
I do believe that. So
So
let's
so
see.
why
Let's see.
would why wouldn't they release, right, like say no steering wheel, no pedals. I mean, we're not born yesterday. We can just infer that they'll have a
Yeah.
version that will have that, and we don't know the price, so that's something that I'm looking for 1010 is I want to know, will they reveal just like when they unveiled the Cybertruck, a target. They're not going to do that 5 years ahead like they did
Yeah.
with the Cybertruck. They're going
Yeah.
to do that for next year. Jeff Lutz points out the last earnings report shows that they're next year they're going to increase capacity by 50%.
Yeah. Three
On
million.
what? Yeah, exactly. So what on what? What are they going to make? Well, logical answer is going to be this less expensive vehicle. It's been talked about for how many years now? So it's been a
Yeah.
long time, and as you can see, are sales low because of Osborning? I'm sure part of it does have to do with it, but really, it's the interest rate environment, and people, aren't running out there buying, $50,000 cars.
Yeah.
So
No, that's interesting. It's an interesting point. We'll see. We'll see in less than 6 weeks' time to see what this is gonna be. I'm very excited for it. So quick question. What is your 2030 Tesla stock price target?
oh, you mean like what dart am I going to throw at the wall? And um y- y- I think that there's the way I thought about it was from 200. uh I think that by 2030 it's very possible that we see like a 5x. So seeing
Mm,
seeing a
1,000.
thousand makes sense to me. Does that is that like I think like in probabilities. That's another Emmett Peppers one. I think about like what is the probability that we see a thousand in 2030, or 2029, or is it 2031, or like when is it? And what does the underlying business have to do in order for it to get to that valuation? And so uh, the company that we see now is way better, and with more, more potential for SaaS revenue, more potential for energy. We're going to start seeing these things playing out over the next couple of years. And I look at that, where's the CEO and where's the company? What are they targeting? If they're targeting that energy becomes greater than auto, I remember that. If FSD becomes larger than energy, I remember that. And then bot. Okay, well they're writing a new book, and like I think about the words that are being said. Obviously, they're very grandiose. 30 trillion. Wow, you're insane. No company has ever existed that. But is it possible, right? Is it possible? How much probability would you assign to that becoming a reality, that Tesla becomes worth 6 trillion or worth 5x that? I don't know. It's such a, we don't have enough data to model or realistically model it. It becomes just like a guess on execution, right? Are they able to execute what they're targeting? And the reason I picked Tesla, it's because of the total addressable market, right? The TAM. And back in 2019, I looked at what were the largest TAMs of the market, and it was like oil and energy, and pharmaceutical was up there, auto is up there. Um, so when you looked at it, and you look at how big of a pie are they going after, it's massive, and the bot pie doesn't exist yet, right? So
Mm,
that to me is why it is impossible to guess, but also it is not entirely impossible, right? It's a greater than 0% chance that we do have bots roaming around on the streets and in our homes. We already do have bots, right? People have lawn care bots, they have floor sweeping bots, they have a
mm,
car that is
okay.
a bot with four
Yeah, yeah.
wheels. And so we have robots, and we have, you could see, if you walk through the Tesla factory and you get a tour, you can see so many bots, and they're purpose built. And now we have maybe a general form and a humanoid bot, which makes sense as well, because the world is built for the humans, and it's in human form, and tools and everything that it's all built for us. So building a humanoid bot that can do what we do makes sense to me.
Yeah. So you're saying 1,000 is realistic by 2030.
it, it's a nice round number. It's possible.
Nice. I'm think. Well, yeah. I mean, in 2030, it all comes down to you know, what gets solved, what gets relieved. Because I know the ARC is saying by 2027 or even 2026, the stock's gonna be around 2,000, and because of the reason of the robotaxis being on mass scale and stuff like that. But the question is, do we see robotaxi being mass scale by 2026, 2027? Like that's the
Yeah,
hard part to see.
sure. Yeah, and I don't think it necessarily is. It's like, what is your definition of mass scale? And what, how much revenue is the company pulling in? That's the question.
Yeah.
And what is that growth rate of the revenue? Because like, if you think about what we used to say, right, the target was 2030, by 2030 Tesla would make 20 million vehicles. And Wall
Yeah.
Street asked the great question. Go ahead, divvy that up. How many are, the sedan? How many are vans? When you start breaking it down, at some point you run out of, the whole fleet has been electrified. There's a long way to go, but we saw 414 when you just had cars, right? And the market got way ahead, way over its skis, as they say. And you had free money, right? You had free money being printed by the Fed. And so, realistically, like last year, I between my options guys, I called 250 in the beginning of the year, and then that's exactly where it ended up. I wasn't overly enthusiastic. This year, same thing. Some people are like, oh, 300, it's easy. I was like, no, 270 to me was a genuine surprise. I was, the fact that it went over 250, I thought was great. But that's when uh, I didn't panic with covered calls that I had because I just didn't think that it can hold, especially once they move the date. And that's what
Mm,
Wall Street likes to do, right? They buy the rumor and then they sell the news. And who gets stuck holding the bag? Foolish. No offense to anyone. Foolish us foolish retail people who have FOMO. We FOMO in at the worst possible time, right? You watch it go and climb and climb and climb, and it's like, oh, fine, okay, I'm gonna get it, and that's when they
that's
rug
when they
you.
pull the
And
rug. Yeah,
yeah,
yeah, that's hilarious. No, through what I see, I think around 1400 to 1500 by 2030 would make sense
okay,
around. But then again, it all comes down how they execute the Robotaxi. Like Ark is saying 900 billion or 600 billion revenue. I'm like, I don't know about that. I don't know about that soon. Well, that's like three
yeah.
years from now. I'm not too sure.
Well, their modeling is usually what, 5 years out, and they're saying that
Yeah,
they'll usually have
2029,
the bearish, bear case, bull case, and
yeah,
middle of the road.
all
So
that kind of stuff. Let's see.
yeah,
Let's see. I don't know.
exactly.
I'm keeping it between 14 1500 and
But
anything
why
more than
so
that.
greedy? Why so greedy? What, you're not going to be happy with 600 on the stock?
Well, here's the thing. When I break it down, when I break down the numbers, that I get very conservative with these numbers, right?
Mm-hmm.
Like I'm thinking by end of 2032, Tesla will have 32 billion. I have to check my numbers again, but I think it's on 32 billion in just revenue alone in 2032. So my expectation isn't really that high. It's not like Arc Invest High where they say by 2027 they're gonna have
You mean
400.
profits?
No revenue.
32 billion?
Yeah, for the robot. I
Aren't
think I have to pull it up. I have to pull it up to
Yeah,
see what
I
exactly it is.
yeah, I think they don't they have more revenue now?
No, just robo taxis.
Okay,
Just the robo
gotcha.
taxis.
Just the robo taxis.
Yeah, just robo taxis. It would be around. Let me see if I can find it. I pull that out here. Yeah, 2032 around robo taxi revenue of about 38 billion and profits
38.
of being 10% of that actually. Not even 30 40% because if and this is only taking the effect of Tesla's own fleet.
Wouldn't
Not
their take be much higher than 10% if you like what is the costs for
Oh no.
for it? You
Oh yeah,
mean
yeah.
from
So
the cars themselves?
yeah, so yeah, because here's the thing: when Tesla wants to do the what's it called, robotaxi themselves, they got to produce the vehicle, which is probably going to be
Right.
around 20,000. They have to insure it, they have to clean it, they have to pay for the
Gotcha.
charge, they have to put the depreciation, they got to put all these things, which at the end of it comes down to a 30% gross profit or 25%. I mean,
Okay.
this is how I'm modeling it. Um, That's energy profits. Oh wait, no, my bad. Not 10%, 30%, 30%. That makes sense. So 38 billion in revenue in 2032 in
Hmm.
robotaxis and profits around like 12 billion. Like that's
Okay.
what I see robotaxis doing. Of course, energy will be much higher then. I'm closer to 80 billion in revenue, profits around 25 billion if it's 20%. And then the main things are, and then as we keep going on with the robotaxi, it just exponentially starts to grow and stack on each other. Like that's the beauty. That's the beauty about this um robotaxi. Like for 2026, I put here revenue being 19 million, profits. I don't know about profits, but then the year after that it goes to 38 billion, and then in 2028 goes to 380 billion, and then in 2029 the year after that goes to 3.8 billion. So like it just stacks on because it's just an exponential growth. Once they see the data, that is beautiful. all they got to do is just deploy it in different states and maybe in different parts of China or maybe even in Europe at that time. So that's how I view it. And that's how I get to the valuation by 2030 around maybe, I mean, if they're growing like this and if they're actually doing licensing deals and the bot is coming up, you could give it a high PE of around like maybe 100. Maybe you can get away with over $2,000 per share by 2030, but I'm keeping it in like the 1400s, 1500s around there.
Gotcha.
But going
Yeah.
to your point, yeah, going to your point that if I'm not happy if it's like 600, hell no, I'm not gonna be happy about that, man.
Why? But see that to me is how I got in trouble the first time, right? Is I thought that there's no way the market will do X, Y, or Z. And you know, what's that great saying? The market can be irrational longer than you can
Yeah,
remain liquid.
that's true.
So that's where like I don't have to be perfect. You know, my
Yeah.
dad always says you can't time the market, and I disagree with that. I think you can't time the market
Mm,
perfectly. So uh, and that's the hard part. But
that's
options
stressful.
trading is the definition of timing the market, especially if you're doing intraday trades. You know, I shared some screenshots with you with my Roth, and it's like you could see I'll sell covered calls and I'll close it, sell it multiple times per day, and that's timing, right? That's timing the market. That's seeing that nothing is happening intraday today. There's no news, and um, yeah, which one is this? The first one, or is this?
Yeah, this would be the first
Yes. Okay. Yeah,
one.
that's the first one. So this is so here's a great story. I think it's worth everyone kind of chewing on it with me. So back in April, I was selling covered calls. You could see I had 300 shares in my Roth IRA. So it's I've funded it in my 30s. I'm 42,
Wow.
and so I started funding it, and you could see the three contracts that I wrote, and you could see I open it, I'm close them. You can just kind of go from the bottom of the screen to the top because that's we're moving in time. And you could see I bought an extra share on what was that May 9th that from my profits. But I got into trouble, and you could see it. It was we were in the 150s, and then we popped at some point in April. We can cross reference by going on the daily chart. I won't look that far. I'll look over here. So April 22nd, we were, yeah, in the low 138s. And silly me decided to gamble being so far down. And you know, once we had that breakout on April 29th, you could see we went to for that day we went the closing was 195, the low was 184. The day before it was a huge gap. 426 was the low was 166, the high was 172, and we closed at 168. So what did I do? I rolled out, and I rolled it out to, you see, August 16th, 195 calls. And I gave back a little bit of the gains that of me selling the calls in the first place. You could see I sold them to open, sell to open the covered calls. And go ahead and go to the next one.
Okay.
So Roth, if you don't know, you can only add once per year, $7,000, and you can't add to it except next year. So
Right.
you could see it finally clicked in my mind. So during this entire you see, what is that, August 1st, during this entire 180 to 270 run, I didn't panic. I left those calls open, but it didn't click that I should have sold at 250 or 270 the 30 extra shares that I had. I had 330 shares. And that's why you see the sale of 30 shares. So I sold those shares. Now again, most people are like, "Oh my goodness, look at this. The options is so bad." Yeah, this is the real options life lesson that that one has to be understand, and which is why I'm sharing it. But there's a strategy. So I sold the shares at 215, 69 appropriately, and you could see I started. I bought back one of the contracts at a loss. I see I paid like 1,600 for it, to close it, and then I started. Because I had this one contract that 100 shares that weren't under a covered call, I started selling again. And it's like you don't learn your lessons, but because the price is falling, I felt confident doing it, so I kept doing that. And you could see then I started buying back my shares
Right.
um, at 197, and then I kept messing around. I think I bought back a contract as well. And long story short, if you go to the top, you can see that I started buying back shares at 195, 194. So I'm making that delta, which means I'm getting back the money that I'm losing. And so I stopped thinking about this like, oh, I could never sell shares um, for stuff. And that freedom that happened as a result uh, has, I mean, truly, it set me free because now I'm not like, I don't have this idea, oh, I could never sell Tesla. I have to buy it and hold it. And uh, so, anyway, if you go to the next one, maybe hit the left arrow or something like that, or the right arrow.
No,
Or
I
go
gotta
to
keep
the,
going
yeah,
out and in. There we go.
you got to go on. Gotcha.
Yeah.
So you could see I bought some shares. Same thing. I'm messing around with intraday. You could see by the dates, and you
And
just go to.
these call Tesla, they're there's
Mhm.
just two here. That's two contracts, right?
That's two contracts. So that's 200
Okay.
shares worth.
Okay.
Remember, one of the contracts remained open, and we're going to see in a second. I actually let that get taken away from me. I could have closed it. I had enough cash in the account from the sale originally to close it, but I wanted to a forcing function for me to become bullish again on leaps. And so because it's scary to kind of once you lose money in options contracts just by betting that it's going to go up, and so like if I ask you, and I will ask you, in 2 years, where do you think Tesla stock price is?
Oh
In
yeah,
two
I
years,
mean
let's
in
say
two
December
years,
of 2026. December of 2026.
December 2026, so pretty much 2027. I would say it has to be back at the all-time highs at least.
At least. Okay.
Yeah.
So you're going to see in a second. um I don't agree. I
Okay.
just don't know. I don't know because 2025 can be a very bad year because we still don't have 0% interest rates. We still don't have the recovery in the automotive sector, and it's very possible that 25 is another flat year. So I want to kind of have that as the safety net, that I'm not going to be overly bullish. Now, if it does run, like there is something that we're waiting for. If Tesla starts producing earnings via Robotaxi or software as a service, you might have a reclassification of Tesla from consumer discretionary into tech, right? Because really, Tesla isn't a car company. They're a
Yeah.
technology company, and they have
Yeah.
all these irons in the fire for revenue. It's not just a dream that, oh, they have all of these startups under one umbrella. We can see that, right? We can see the different avenues that they're walking down to try to generate revenue in the future. So, but operating like this with a safety net has been why I became successful in trading. Last year, I was still kind of hopeful, but when we bought the house and I started kind of thinking about things differently and making it a goal to be a day trader on the public portfolio, that changed my thinking. And honestly, the proof is in the pudding. If you see results, right, there's the bad case, and that's why I'm sharing it. I want you to know that it's not all glamorous, and you have to have some strategies. But and buying contracts and selling them, it's an art, right? And I could do it means other people can do it, but you have to really, really understand that greed management is super important. Knowing when you're wrong And if you get into a contract, right, if you buy a contract, a put or a call, it's like a balloon that's evaporating. And I think you said you had Yashu on the channel. Um,
Yeah, I had him a couple times.
awesome. Yeah. So that lesson is from him. He gave me that visual, and I love that.
Shout out to
He's
Yashu.
my Yeah, shout out to Yashu. So that visual of the balloon, and the shorter the contract, like if it's a week or a month, it evaporates pretty quickly. So the longer you're holding on to it, even though the underlying price might be the same or growing, the value of the contract is actually decreasing. And so go on to the last one. I think it should be the last one because
Last
we're
one.
getting
Oh, you sent me a whole
yeah.
bunch. One,
I
two.
sent you the full story. Yeah,
Yeah, you sent me the full story.
the full story. So there you can see we are currently. Oh, actually, go to the last one, not this one, because
Last one?
I sent you. Yeah, I it's going to be a mirror of this one, but it has the full
Sure.
picture. It has the heading and everything. So you could see I sold. I let my contract expire in the money, meaning someone got my shares at 195 when we were at like 212 or 205, whatever whatever it
Uh-huh.
was at.
Yeah.
I didn't want to close it. Like I said, I wanted a forcing function. And you could see what I did was I initially bought December 2026, so all the way out, 300 strike. So you said at least all time high. What did I do? I bought 300 strike. I
Yeah.
don't need to be greedy. And so I'm
Okay.
still sitting in it. I'm still sitting in that contract. You don't see a sale for it. And it's
2026. Okay.
down, yep, and it's down like 800 or something, whatever that percentage is. I glanced at it, but I didn't look at the
Okay.
percentage.
So here's my
Mm-hmm,
question. Like, okay, so if you buy a 300 call option that
mm-hmm.
expires in December of 2026, what
Yeah.
is your break even on this call
So
option?
see, that's the thing is if you think about it like break even, the math is how much did I pay for the contract? It's what was that, $60, right? So that was six
Okay.
thousand dollars. So
Okay.
add $60 to the 300, you have a $360 break even. That's
Wow.
where if it gets to 360, mind you, what you said about 414, if we actually get there, this contract will be in the money and it'll be worth more than the 60 that I paid for it. But more than likely, I won't even let it go that far because I will, once the wave starts of these kind of upgrades or the FOMO comes back into the market, then I will switch to more aggressive contracts. And you can actually see I ended up buying the 250s out for September. So the same day, I also bought 250s for September of 25. So my bet is that we have going into the Robotaxi event, we do see that FOMO wave reappear,
Yeah.
and especially depending on what they announce, and hopefully these will go green. Now, could I be wrong? Yes, I could be. But there's a theory that I operate under now, which is down in shares and up in contracts. Now, not the whole portfolio. In this case, it's about a third of my portfolio, a little bit less. So that's kind of how I think about it. As I'm willing to gamble that even if that expires worthless, I want to juice the portfolio and recover some of that money that I lost by buying buying a leap in my Roth back in the day. And we can go back and look at that stuff. But overall, here the lesson is I could have had I had 330 shares. I think I would have lost somewhere around 10, maximum 10 shares by closing those contracts. And we could actually look at like how much I paid for the contract, which was I think one was like $800, another one was 1,100, and we could do the math at how low the contracts got when I closed them. So, and what is that worth? So there's a way to go in to the strategy and get yourself out in case you get into trouble, and not lose too many shares doing so. It's an important thing where the proof is in the pudding. We went to 270 during this time, and I called BS on it. And that understanding that the market is, who's buying at 250 and 270 is it still the institutions, or have the institutions now dumped it onto retail that's FOMOing in late? Because that's how I explained the 180 to 250 move, was Elon's comp package and this 10-10 event, which
Mm.
got announced, or 8-8 event at that time, which got announced, which was a surprise, of course, but you could see how quickly the market moved out of the 150s and it went straight to 200 in
Yeah.
3 days. So, it's important to be prepared for those things. So now I try not to leave covered calls open overnight ever. So I still trade them intraday. I take little pieces, but I don't leave them open overnight, because that to me is, some kind of news comes out and I'm in trouble. So that's how I kind of protect my long-term portfolio. But the day trading portfolio, that one's different, because I don't care about long-term shares until the market starts moving. Once it gets going, then I'm gonna convert back out of leaps into shares. But currently, most of the portfolios it's at 600 shares, is in the public portfolio. So you'll
Yeah.
see when I post screenshots, it's like 6 contracts that I sold, and then I closed, then I sold, closed.
Yeah. So what I'm looking at
Making
is
sense?
all, yeah, but what I'm looking at is all calls, which
Sold calls.
all,
Yep. Sell to
oh,
open, buy to close.
okay. So none of these will be leaps by any chance, right?
The ones at the bottom that are, you can see buy to open. So look at the difference.
Ah,
Buy
that's
to
leaps.
open means I'm buying a contract to open a position, and
Okay.
sell to open is selling a contract to open a position.
Okay. So that's pretty much
Okay?
you're buying and that one you're selling. Okay. That
Exactly.
makes
So when I
sense.
sell that's basically a covered call. When I sell a call contract, you could see I collected, what is that? The two contracts, $1.11, which I collected $220. So $1.11 per share times 100 shares is equal to $110,
Hmm.
times two
Multiple
contracts
two.
is
Yeah.
220. Okay, that's the math on that.
I
Makes
see. I
sense?
see. Yeah, I see.
And
Okay. I think, yep.
Making sense? Yeah. Go ahead. Ask the questions of, and then
Yeah, yeah, yeah.
follow
No.
follow it
So
up, and see if you understand.
yeah, one part that I was like a little bit iffy on is that, for example, the buy to open call for $300, they said that your cost would be six
$60.
thousand. It
Mm-hmm.
was oh
Yep.
$60 per. Well, that's one
Per
contract
share, per
per share.
share
Oh, okay, okay. So that would
times a
mean,
hundred.
so okay. So then what you said that the stock has to go to 360 to make a profit, right?
Well, that's the thing about options. If the price, the underlying price, we can kind of get a rough idea of where the stock price was, on August 2nd. Um, August 2nd, we were dropping. It was the red day. We had one red day, and August 2nd was the 205
Yeah.
low and a high of 216. So I probably bought around 205, or so. Those contracts are pretty close, but remember, time has ticked on. There's two components in an options contract, that I'll discuss. One is the time component, known as theta, and then the underlying price, right? Remember how it's a balloon that's evaporating? Well, that's
Right.
time ticking away. So the
Okay.
value of the contract has changed. The underlying mathematical formula that every contract is calculated on, it measures, there's a thing called delta, and you have gamma, and then you have theta, and you have all the Greeks, the stuff that you hear about. Now, believe it or not, I'm not an expert on all of these Greeks and how to calculate it. All I know is that if I buy this contract when the stock price is at 205, and by, in the next month or two it goes back to 250, this contract will be worth more than $6,000. And once it's
Oh,
worth more than
okay.
$6,000, I'm going to sell it. Once it goes green, I'm going to sell it. I'm not going to hold it to
Okay.
expiration, because think about what the contract allows me to do. The contract
Mm,
allows me to buy shares for $300, right? No
yep.
matter what the price is, as long as by the expiration, by that point, it's worth more. It's in the money. And once it goes in the money, again, my favorite YouTube channel, once
Hmm.
it goes in the money, that contract I can exercise. I can use my option. If I purchase this contract, I could use my options. And in these fancy brokerages like Interactive Brokers, you can literally say, I want to exercise this contract, which means that the brokerage will go out and buy 100 shares at 300 for on your behalf from someone that sold this contract, and you'll take assignment of the shares. Now,
Okay.
that make sense?
Yeah. What this is pretty much is that at this given time, or August, when is it? This you did this
It's September 1st.
September 1st. No, but
Or you're saying at this
this
time when I bought it.
yeah,
Yes.
yes, which was August 20th. The
Hmm.
contract that you got this was $60 per share, but the
Correct.
same contract maybe a year later will be 120 per share.
Correct.
And
And
then
right
if
now,
yeah,
yeah, I could.
and if the stock goes to 250, 260, let's say around that price, whatever the price is going to be, when well, obviously the stock goes higher, the contract will get more expensive. So if it goes to 120 bucks per share, you would sell it then for 250, whatever the stock price would be, at
Yep.
that contract price. So you would make double the amount of money.
Perhaps whatever the math works out. And what happens
Okay.
once it goes in the money, it's actually exponential. So if you do some quick math,
So you're pretty
uh,
much sorry. So you're pretty much it's like you're pretty much it's essentially
controlling
like
100 shares worth of
yeah,
stock. Okay, you're
yeah,
controlling 100 shares worth of stock without buying the stock. So if you do the math, it's exactly what I was going to run the math with you,
yeah.
is how much would 100 shares at 205 cost you, right? It would cost you
Yeah, right,
$20,500.
right.
So I paid 6,000, which is about one. What is that, like third? A little bit
Yes,
greater than a third of it. So think
yes.
about that. There's like this 3-to-1 leverage within the contract,
Mm,
meaning for every dollar that the underlying goes up, mine will go up like 33 cents or something like that, right? It has
okay.
some Greek that you could look at, which is delta. You could look at the delta and you could see how much the price of the contract increases based on the $1 change in the underlying. And so you'll hear people say, by 80 delta, 20 delta, depending on if you're buying or selling the contract. I don't get into all those technicals. The reason for me is I'm self-taught and I don't want to follow any rules until I'm ready to write my own algorithm for how I'm buying. What I'll do is I'll analyze my actions and then learn from them. And so this is where we've gotten to. We've gotten to the point where like I thought at 205 we would kind of get some steam, but we didn't, right? We on August 1st, we ended up dropping all the way down. We had that carry trade, which was unfortunate, right? It was
Mm,
unfortunate that happened, but it happened. And do I panic sell it? No. I just believe that once I did the research, I understood that that was a margin call situation based on the yen and people borrowing at near zero and arbitraging in the United States or wherever in buying treasuries or whatever it was. And so understanding that, I knew that we were going to have a quick recovery. I didn't think it would be that V-shaped, but it was, and we kind of bounced back up. Now, the contract I think went green possibly at 228, but I don't recall. Um, but right now it's worth $5,243.64. So it's down 12.51% at the moment. But that's the nature of investing. I did want to hold it all the way to the Robotaxi event, so that's why I thought like 200, around 200 was a good area, and we're kind of seeing that, right? What are we at? 214 on Friday's close,
yeah.
so we're right around. But you can see that the value of the contract is lower, even though I bought it, at that time.
Okay,
Make
so
sense?
essentially, yeah, it makes sense. So essentially, the contract you're buying now for that time, let's say 6 months down the road, the stock price is higher. So you're pretty much
Yes.
going to sell this contract to somebody else, but at a much higher price because the timing is closer.
Yes, the
Oh,
timing is
okay,
closer and the
got it.
price the price is higher, but the timing closer goes against you because it means that the value of the contract, the theta component is eating away at the contract. But as
Okay.
long as it's high enough, the math will be on our side. There's another component that we want to discuss
Mm,
called IV, implied volatility. So if you buy contracts, and I've had this happen when I was, young and inexperienced, just a bigger monkey throwing darts or a more blind monkey throwing darts. I would buy right before earnings, betting that the earnings would be good and that the market would take the Tesla up. And guess what? I was right. I bought it the night before. Earnings were good. Stock price went up. The value of the contract went down. And I was like, wait,
Mm,
what just happened? How come? This makes no sense. And
right.
what that is, it's called IV crush. And that's when the implied volatility, which is a component of the contract, and it falls, that changes the math on the contract. And so that's something you want to know about. And so
Jeez.
buying or FOMOing in right before earnings because I heard some rumor or something is not the best. And so as you can see, it's very, very complex.
Yeah.
But the takeaway shouldn't be that it's so hard I can't do that. If you're curious, there are people out there that were curious too, and they followed their curiosity all the way to profitability. And I've seen on this last Cyberbulls video some comments, and they were like, "Oh, I don't believe he's making money," and it's like that's why I created the public portfolio. You can go ahead and see just how profitable it can be if you put it all together, right? And not bragging, but I'll brag. In 100 days, right, during that 118 of 128 profitable, it was over $45,000 in gains, and not on hundreds and hundreds of thousands. I was never deployed more than about 30 grand or so, except buying shares, excluding the shares. I would go into some contracts, get out, and you can see it. You can look at the individual trades in my highlights section of X. It's public for you to see and learn that it's possible. Is it a gift? Maybe. I don't know. But is it possible? That's the question, right? I'm a
Oh boy.
college dropout, and it's possible. So if anything, I want you to be inspired to learn, but
Right.
respect that you could lose money. And
Yeah.
if it's not for you, then don't do it, right? If anything, it's a cautionary tale as well. You got a good example of how you can get yourself into trouble in Iraq. You can get yourself, losing on leaps if you're betting. If you make a bet thinking that Tesla is impervious to the market forces. So uh,
Yeah.
I hope that's
So
helpful.
no, it is helpful. It's a little bit complex. What I was thinking is that maybe I could get as a testing ground to get 100 shares of SoFi,
Okay,
because and do like a leap or a call on that and see how
okay,
that goes. Because what
there you
100
go.
shares is
Sure,
like what
sure.
$800. So it's like whatever. So
Yeah, you're not going to collect a lot, right? So depending on the volatility, right? Options are just like every other thing. It has a supply and demand, and the greater the supply, the more the greater the supply or the greater the demand, the contract price will vary, right? The bid and the ask doesn't change. That theory applies to stocks and options. Someone's willing to pay a certain amount and someone's willing to collect a certain amount. The market makers, they make their money on the spread between those two contracts. Something like SoFi might have a pretty large spread because they don't have a large volume. You can open up the options chain and learn to read it. It's not very difficult. And of course, there's YouTube videos for it. Um, and you can see how much you're willing to, how much the bid is, what the ask is, and how much you'll collect for doing so. I have a small goal of 250 a day. It's not so small, but for me, that's kind of, I think about it like, can I make that amount of money selling against my position, like in
mm,
the public account, right? I have 600 shares there, which is a lot of money. It's what's that, 120 grand now,
yeah.
that it's ballooned to. But remember, there's profits that like that 47K, that's in there,
Mm,
and that's how you can grow an account from nothing. I started originally with like $1,000 account, and you have a spreadsheet for it and how I made it multiply and learned how to do this kind of covered call selling or do just buying in that $1,000 account. That was buying because you can't, like you said, maybe you could do it on another ticker like SoFi,
Yeah.
but but I don't even know that company. I don't know what it's going to
Yeah.
do in the
My
future.
my
So
my bet with that is that when interest rates go down, it'll benefit.
okay,
So
gotcha.
that's my thinking. So okay, maybe we can try it as a testing ground on SoFi to because I'm a visual learner. I have to
Yeah.
try it in order for me to fully learn.
Yes. Yeah. Same.
So yeah, so maybe it's like okay, try it out there, see what you learn, see what you
So you
lose.
don't need to do it on the real, with real money or real stocks. You can most brokerages have a paper trading
Oh yeah, that's
part,
right.
and so you could practice
I'll look
with
into that.
Tesla. Like to me, I understand how Tesla moves. I've been studying the ticker day by day for the last 5 years. It's literally every day I watch the stock and I try to guess what it's going to do. That's where technical analysis really comes in, right? Understanding that there's algorithm trading that occurs much more than human trading, and what algorithm, what pattern is the algorithm programmed to run, or multiple algorithms, and who's in control? Is it the bears? Is it the bulls? What kind of news was out? Like there's all of this stuff, and there's these things called call walls and put walls, and understanding, most importantly for you long-term investors, including myself, is
Yep.
understanding that you can open up the options chain and you could see that there's this giant wall of call contracts that will have to be paid, that are bought by institutions and day traders, right? Who's playing the options game? It's not retail, or most of retail doesn't play it. So who has financial interest to pay out, Tesla at 230 for next week, right? How big is that wall at 230 or 225 or 220 or wherever it is? And you'll see the most amount of contracts will be that. So then it becomes a statistical game. Like, what is the probability that the Tesla stock price will go above 230 and all this money, billions and possibly trillions of dollars that have to be paid out to people holding these call contracts, right? Somebody's winning, somebody's losing. The market makers, they don't care. They're delta neutral. They buy the underlying, but all of these things that you learned about with GameStop or with short squeezes and gamma squeezes, I think it's really important, and that's why I'm messing around with the options world, is because I'm trying to understand how it impacts Tesla, the company, the underlying stock. Over time, in the grand scheme of things, you can't stop Tesla, right? Or any company, as long as they
Right.
produce revenue. But that lesson to me is probably the most important thing out of our talk, is understanding that the options market is a part of the market, and you want to understand that there are forces that will keep the price underneath until the
There's
market
something.
decides, yeah, until Mr. Market decides to take it or let it run, because that's where you hear the market manipulation that can occur,
Yeah.
right? All of a sudden you see some stupid story come out, that whether it has basis or not, and the stock price just tanks. Well, algorithms are programmed to react to stories that go in the media, and so is it manipulation? Absolutely, but they get to do it. So it's a part of the market, and you want to understand it, or at least I do. I hope that doesn't sound too preachy.
Yeah. No, it's just this option thing is a whole new world.
It's a beast. Yeah.
It's crazy. Wow. Well, that's. I have to like try it out first to see with the paper trade. I'll try with that
So,
to see
so what
how.
makes you curious? What makes you curious about options?
Because I'm a Tesla bull, right? I know the future. I know the value of Tesla. It's like, do you agree with this? Do you agree that Tesla will become the world's most valuable company one day?
I do, yes.
So if we believe that, isn't that an easy way to make money if we can option it as far as we can? You know what I mean? Like I'm thinking like, okay, if you know it's gonna go up, why don't you
You
put some
think
option?
you think you
You
know.
right? Right?
That's the important part. You
Yeah.
think you know.
Right.
So the thing about options, it has an expiration date, and you
Yes.
want to be cognizant of that. So I think about options trading and day trading, like, or swing trading or momentum trading, whichever one. If you're buying and selling anything, even if it's across a year or 2 years, or even shares, right? There's a lot of people like Christian, my buddy C Valente. He just does it with stock. He doesn't like the time component of an expiring balloon, so he'll momentum swing trade companies that he's researched, and he'll buy these dips. And like Tom Nash is a good one, that many people know. Like he doesn't he him and I get along really well. I'm in the options world. He's not, but it's the same logic is important. Options, you have to understand, they can expire worthless. And you could be right in the overall direction, but you have to be right about it in like think about it like surfing the waves. So I look for setups. I look for a nice big wave on the horizon forming before. And if you've ever surfed, you can identify that there is a swell coming and there's a wave coming. And I don't need to time it perfectly, but when I see that there's volume as one of the things that I look for, and I see on my screen I have level 2 trading, and I'll see the ticker, right? That's volume coming in, and it starts dropping super fast, and I could see it in my peripheral vision. Uh, so that's when I want to hop on a wave, and I'll buy a contract, whatever it is, and then I'm literally holding it for 30 seconds or a minute. Because it's good. It's if I catch it within the wave, it's going to be worth more than when I bought it. So I'll buy it and close it right away. And I'm not greedy. If I get $25, great. If I get $50, awesome. If it's 200, great. I just made most of my goal. But that's the thing, is like, how much are you willing to risk? I used to do that with $1,000. Now it's a little bit easier for me, since I'm playing with winnings, to push in 5K or 10K for a 30-second trade, right? Because if it's going to go against me, I'm just going to get out. And yes, it'll be a loss, but the whole point is, if I stop being greedy and just pick up whatever I can pick up, then that's been really helpful for me, to kind of lose this perma bull, long term, all in. Tesla can only go up. The reality is things can happen, right? There's risks to the next 2-3 years that you want to evaluate when you're buying a leap contract. That's why I don't recommend it. I've been, on Cyberbulls, I've been talking about that. I'm waiting. I took a little piece, and yeah, in my Roth, I did it because it'll be tax free for me to day trade it. But overall, my Roth and my long-term portfolio, it has thousands of shares. It does not. Its job is not to make short-term bets. Its job is to be a long-term, mostly shares. Maybe take 5-10% of it and put it into a leap contract when I see movement. But I'm not going to go like I did in 2022, and then go 50% leaps, and then not close it out, not de-risk the portfolio. That was my fault, right? These are numbers that you want to wrap your brain around. You take too much risk, and time eats away at your contracts, you will lose money. And that's an important life lesson. So be greedy, but little
When others are
less,
fearful.
little
Yeah.
less.
I
Yes,
was
exactly.
yeah. I was thinking when the stock went down to like 140, 150, I'm like, maybe I could just
Perfect.
try call position then.
That would have been
But
amazing.
right? But how far would you do it then? Like would you do it by end of next year or by end of the year? Like what's the right timing, correct timing then? Would you
So,
recommend?
I mean, I definitely don't want to recommend anything.
Not recommend, but
And
yeah, like through your experience.
well, but that's the thing. Like, I'll tell you what I do, and then
Okay.
people can kind of deduce. What I don't want to happen is people, listen to this conversation and think that it's easy, and think that I'm giving any kind of advice.
Yeah.
It's really like, I don't want someone to lose money and then come at me and DM me. My DMs are open, and then say, "Oh, I listened to you." Don't listen to me. I'm a monkey throwing darts. You have to understand that. I'm a self-taught individual, and I maybe it's luck. Let's call it luck, okay? I've been lucky, but I've also lost money, so I've been unlucky, and now I'm trying to balance the two.
Yeah.
So
So none of this
what I
financial
would do,
advice. Yeah.
yeah, yeah, and what I would do, and which is what I did. I wish I did it at 140. As you can see, I was selling covered calls,
Yep.
and I was kind of poor at that time. Um, uh, so meaning all my money was deployed. I was cash poor, and so I didn't convert the shares. What I should have done was sold shares and converted it into a leap. What kind of leap? I don't know, a year out, right? Because if you're buying on the bottom of a wave that's red, then the probability that you have some sort of recovery back to the median, right? You could be overbought or oversold. So those things are good to look at, and understand that, okay, the market has been selling Tesla, and it's really a little too far, right? The business itself, the EPS, if you look at kind of, this is why looking at other people's modeling or making your own modeling is important. You kind of want to have a fair value for Tesla, not the super bullish, crazy value, but like, what is a fair value for Tesla? Is it 200 the number, right? Why is the market keeping Tesla around 200, right? Clearly, 200 is a fair value for Tesla. You could zoom out and like look at where it was 4 years ago, and
Mm,
look at it now, and you could see we're right back to this magical number. Okay, so that to me is where the market thinks that's where fair value is. So am I going to go and be super bullish and buy 420 strike for 2026? Yes, it'll be a less expensive contract, but time is going to work against me, and we have to have things go pretty well. So I like to play it safe, maybe buy something near the money. So if we're at like 200 or at 140, you asked, buy something like 160, a little
mm,
bit out there, maybe a year out. The more down the line you buy, the more expensive it is. So I would
right.
just, look at how much am I willing to lose, ask myself that question, and then stop being greedy. And that has translated into, see it green, cut it away, and then just keep doing it. And it's so hard to unlearn the perma bullishness, but then you also have to be able to recognize that, at some point you have to stop cutting the green and let your winners run.
Right.
But that's the important thing, right? The 180 to 270, let it run. Right, it's running. You could see there's FOMO there. Everyone's getting in. It's a
Yeah.
whole
Yeah. Yeah.
wave, and it's institutional. Let it run. Let it run. But then you first sign of trouble, and I don't mean like a dollar or two, I mean that big red candle that just broke multiple days. That first sign of trouble, get out. Right. That has served me really well, because if you look at any chart, when you see that giant candle and it's red and it's a change of direction, yes, you might have a retest of it, but more than likely you're seeing the market change its mind. So that's where technical
Mm,
analysis and like little candle patterns on the minute by minute can tell you whether there's been a shift in the sentiment for the day, right?
yeah.
And my options buddies in my signal group, we do this. We say, they'll say, okay, what's high of day today, and we'll call it out. On last week, at some point, I called 221.49. That was the line on my chart, and it hit 221.47. I was within 2 pennies, and that was a line that I drew a while ago because there was supply there. There was a lot of people that bought. Right, you want to be able to draw resistance and support lines. If you don't understand what this stuff means, go watch some YouTube videos. And once you can understand everything being communicated, that's how you become a better investor, not just a short-term gambler. You could become a better investor by understanding where the market will step in, more than likely, right? Statistically speaking, where will the market step in and buy? Where will those hedge funds, where do they see value? So that's been helpful to
Yeah.
me, is understanding that part.
Yeah. That's a lot. This is why I'm just a buy and hold investor.
That's it. Good.
That's it. That's it.
Good. I've
But
I've
let's
talked
see.
you out of it. I've talked you out of it. No,
Yeah. But no, I am curious about this thing. I'll try the paper trade to see how this
paper
works
trade.
to
Okay.
get more like, educated on it. But that's it's a lot. It's a lot of stuff. But sheesh, no, I thank you for coming on, man. Like this was a
My
lot of
pleasure.
info and coming from one Tesla bull to another. So that's a sheesh moment. Um but yeah, I mean yeah, I mean this option stuff. I know Nicholas was saying that. Yeah, I mean for him it's easy, and I'm like, bro, I don't know why you
You,
think it's easy.
you guys have no idea. I don't think he's shared it publicly. And I'll just tell you this: I've seen the trade by trade. August, Nicholas killed it, killed it.
Wow,
100%, a hundred
wow,
percent success rate. I've seen the
wow,
receipts.
that's crazy.
100%, right? Why? Because he's taking it, he's putting it all together, right? He's putting it all together. And that's like I'll leave it with this. I think that like you want to increase the probability of success.
Right.
So a company like Tesla, you think you know, but really all you're doing is you're putting in research and knowledge that some of the market might not have to give yourself an edge on this company, right? You see the value in it, you're willing to transact and buy. I think about like Warren Buffett, about the farm will give you prices all day every day. Sometimes
Yeah.
things go on sale, right? Sometimes there's a carry trade that happens, and then all of a sudden from 200 straight to 180 and then back up. But like that's that kind of thing. On that day, I made money. I because I had covered calls that I guess I was swinging or something, or maybe there was a put that I bought. I don't remember what it was specifically, but the point is, you know, no matter what the market does, you want to increase your probability of success. You want to know how to, ride the market down when the whole market is selling off. Buying puts is okay, right? Buying puts is okay, even though it's stigmatized, but it's insurance. And if and that's how part of those trades in the 128 that I showed, you'll see I bought puts and I made money on it. It wasn't long-term holds, but the day if we're having a red day on Tesla and I don't see anyone stepping in, buying some put contracts and playing the downside, there's nothing wrong with it. And I think that once and maybe I'll get hate for it, but honestly, I just don't care. my goal is to make money and make the
Yeah.
$250 per day, and so that's been really freeing for me, is kind of letting go of some of those bad things that Tesla put it through. And I don't blame Elon, and I don't blame the company. It's choices that I made as an investor, and everything is my fault. And that's been the most freeing thing. I teach my team members. The faster you admit that something is your fault, the easier,
Mm,
and the better your life will be in everything that you do. If you
right.
play victim card all the time, the options game or the investing game will humble you super quick. You can't blame anybody. It's your choice. You decide whether you buy a contract or sell a contract, or buy shares or sell shares, right? If you FOMO out, or you panic sell, which people do, in shares, that's like the worst thing you can do. Where you think the world's gonna
Yeah,
stop,
exactly. I
and
love when those happen. That's when I buy most of my shares.
which means you have patience. And
Yeah.
patience, by the way, that's the greatest skill that I have.
Mm,
Is patience, right? I can wait and stomach through if I made a bad decision. I can get out, but I can also, when I know that it's the right decision that has a safety net, meaning it's like a contract that's a year out, I have the patience to just sit there and go like, nope, I think I'm right. I think I'm right. I'm just gonna watch it be red for a long time.
yeah.
But ultimately, then hopefully I'm right. But if I'm not, then when I decided to make that decision, it was my choice, and I was willing to lose money. So definitely don't invest into options if you both time and money if you just don't have these qualities. And that's actually what my article talks about. Is are you when you watch me, do you go like, I'm just as crazy as that guy? But I'm an adrenaline junkie. My name is R6 Alex because I'm a motorcycle rider, or at least I used to be. And I have the tolerance for precision and pain and sitting through stuff and losing money. So kind of ask yourself these questions, and if you're still curious, then there are people out there that make videos that will not only give you a bullish outlook but also teach you the how. And thank you so much for having me on your channel.
Yeah, pleasure.
It's fun to share the pains and the struggles and the
Yeah.
good stuff.
Yeah. No, thank you for coming on. Everyone, go follow him on X on R6 Alex. And I think you said you have your what's it called? Your trading public there as well, right?
Yeah, just on there. I'm not trying to monetize any of this.
Yeah.
Maybe in the future I'll start a fund. I'm actually I'm joining a what's it called? An incubator for hedge funds. And so over the next year, my trades will be tracked and verified. So it's not just screenshots that one can doctor. And then in the future, if I can maintain my success rate, hopefully, because I get messages all the time, hey, can you manage my money? And I'm like, no, I don't want to. I don't want that responsibility. But maybe someday, that's what I'll do. But for now, we're just having fun and talking Tesla.
Yeah. Yeah. Well, thank you so much,
Thank you.
Xander. And again, everyone, follow him on X. And this was fun. There was a lot of info, and I learned more about options. I mean, at first I was so confused. Now I'm more clear on how it works. You're just pretty much selling contracts at a higher price later. That's pretty much what it is.
Yep.
But
exactly.
okay,
Exactly.
cool. That's cool. I just got to.
It does give you the option. Remember, the whole point is it gives you the option to buy or sell your own shares.
Right.
Or it gives you the option to buy shares. So like when you buy a put, right? If you start getting into the understanding of what that means, that's what you want to do, is go on In the Money YouTube channel and watch videos of him explaining the basics. And when you can understand every word, that's how I got here, by the way. It's just watching his channel and understanding what it means to buy a put, what it means to sell a put, right? Selling a put, a cash secured put, means you're willing to buy shares at that predetermined low price. But buying the put means you're willing to sell your shares at the predetermined price. So that's why it's insurance. In case the market tanks, you have the option to put the shares, you force them to someone, you put them to them at the predetermined price. Even though we might be at 150, you sold it for 180, or you bought the put contract for 180. So that's how you could protect your portfolio for downside risk in case of volatility, like around earnings or around just black swan events. So that's why this mechanism exists. It doesn't necessarily mean that you're betting against the company. That's so important to understand. That's not what options contracts do. Options contracts give you power to manage your portfolio. Or it can.
Yeah. Well.
Okay.
Anyway,
it's
a lot. Yeah.
I could keep doing this, but but thank you so much for having me.
My pleasure.
I have
Thank you
for
coming on.
Friends over, so I'll run. But
awesome. No, thanks.
Awesome to be here. I appreciate it.
Yeah. Thank you, Xander. Thank you for the insights. And maybe I can bring you back on the channel sometime later as well.
Whenever you have the chats around option stuff or just the company, I'd love to. I sleep, breathe, and eat Tesla all day, every day. It's the number one equity I track. Occasionally I'll look at some of these, where the market, like if the market's super bullish about Nvidia, I guess I better go do a little research on it. But yeah, would enjoy it.
Yeah, absolutely. Wow. 2 hours long, man. That was insane, but that was fun. It was a pleasure. All right, man.
Thanks for the platform. I appreciate it.
Yeah, thank you. My pleasure. And we shall see you guys in the next video. See ya.